Dr. Adnan, I want to bring you into the conversation. And basically, it's a similar question around the broader macroeconomic environment that we find ourselves in, right? And we seem to be going, increasingly, global debt is increasing. Monetary easing is not really an option if, God forbid, there was another economic shock or there was another economic crisis. As a bank operating in this environment, especially in a market like the UAE, which is very heavily dependent on cross-border trade and activity, we see increasing trade tensions. How do you view the short-term future for banks in the UAE, and what should they be doing to deal with this environment?
Bismillah ar-Rahman ar-Rahim. Good morning, ladies and gentlemen. Assalamu alaikum. So I think today doing business within the financial services industry is becoming increasingly challenging. Obviously because of many reasons, but I think first and foremost is because we are a part of an integrated society. And by that I mean that what happens in one part of the world affects all of us, whether we are within a 4-hour radius, 8-hour radius, or a 12-hour radius. So I think from that perspective, it's very important to understand that a calamity, a dispute, a war, any geopolitical upheaval in one part of the world can affect no matter where you are. Having said that, I think it's very important to understand that key fundamentals around you need to be very strong. You spoke about UAE, and within the UAE, I think it is an overbanked market. It's an overly populated market when it comes to financial services industry. But I think given where we are within the region, within the GCC, it is the largest financial services market. So I think by that, you've got a very large cake. And if you stick to your fundamentals and do your basics right, you can take a larger portion of that cake. Clearly, I think challenges are going to be there. You've got to take them as opportunities rather than, trying to mince too many things at one point in time. But over the next decade or so, I think it's not going to be any easy. And if you look back, the last decade or so was not easier either. So from that perspective, I think we are still here, and I'm sure that, each and every financial institution has their basics right. And if you have your basics right, you'll only go, in the right direction.
And with all the regulatory development that has happened, do you think that banks are better equipped now to deal with the geopolitical and other tensions that we face now?
I've got to be very careful because there are many regulators within the room. So, of course, with better regulation, I think the financial services industry is more robust than what we were probably a decade ago. And I'm not trying to be politically correct here, but because if you see the regulations that have come about, every domestic regulator has taken on board, international regulation. So Basel III has been fully implemented, accounting standards have been fully implemented, national discretion by regulators have been exercised, and each of these probably at that point in time really feel that, the regulator is giving financial institutions a tough time, but when you take a step back and look at it, I think today we have an industry that is more robust, at least within the GCC and within the region that we hail from. So from that perspective, I think the regulations have fully baked in. And the great thing that regulators have adopted over the last decade or so is that they've given banks to transient into regulation. So it's not like it's a fall effect off the cliff. Basel III, as an example, was implemented over a course of, half a decade. The accounting standards have come in, whether you are in a market that is heavily exposed to real estate, you've got real estate regulation that has come in. So I think regulation is there for banks to become more stronger, so that the economy actually goes in the right direction. It's very easy for us to criticize regulators, but I think they have a job to do, and I think over the last decade or so, every regulator within the region has done a fantastic job.
Thanks. Dr. Adnan, if I can come back to you quickly before we move on from this point of consolidation. It was recently announced about Dubai Islamic Bank's acquisition of Noor Bank. Can you comment on that, and how does that fit into the broader strategy of DIB vis-a-vis the growth strategy and the broader economic environment that we find ourselves in today?
I think obviously the acquisition that we have announced is on the basis that, not just because there is common shareholding and you want to become a larger player, but because we feel that it makes a lot of commercial sense for the shareholders to unlock value and true potential of what an institution should be and how it can compete on a regional level. So clearly, I think, when you look at any acquisition or consolidation or a merger, your ideal point needs to be integration. Because if integration does not, bring about synergies, then there's no point in becoming a larger institution just because you have common shareholding. So I think the key is synergies and what sort of synergies can come out of any potential acquisition. And I think a lot of people, when they talk about synergies, they only focus on cost synergies. I think when I say the transaction needs to make commercial sense, I talk about synergies from all aspects. Not just cost synergies, but also cost of fund synergies, also revenue synergies, also customer centricity synergies. So I think from that perspective, an acquisition needs to be re-looked at a little differently than what we've been looking at acquisitions within the region, because I think a lot of the myth around acquisitions is that there is common shareholding, so I think it makes sense for them to merge. But I think that's not the case. If a transaction does not make commercial sense for the shareholders, then one should not even think about acquisition. So from that perspective, I think to Mazin's point, there are far too many banks, and we are within a region which is overbanked, but that doesn't necessarily mean that you have to go through an M&A exercise just because you want to shrink the number of banks. If any institution is run properly and efficiently, it has two fundamental capacities, and by that I mean liquidity and capital, then it should continue to strive by itself. But if one of the fundamentals is weak and there is not adequate capacity that the institution has to progress forward in today's day and age when regulation is becoming very tough and macroeconomic environment, given the geopolitical risks that we have and given the expectations of customers are changing. So if an institution does not have enough capacity, which means liquidity and capital, then it either needs to look at an M&A activity or a consolidation in any form. So I think common shareholding should not be the only thing that people should be looking at from an M&A.
It's about synergies, basically, yeah. I think, Dr. Adnan, just to bring you to the conversation, and Steve mentioned a very interesting point that even the examples that I've raised, they're partnering with banks. So Apple's credit card is being provided by Goldman Sachs. But the customer relationship sits with Apple, right? Goldman Sachs tomorrow can be replaced with another provider, let's say Bank of America or any other, without Apple losing a customer. But Goldman Sachs cannot replace Apple. They would lose all the customers with them. And we know from the research is that, the banks are significantly cutting on price to be able to get into these relationships with providers like Apple. So is this the future? I mean, are banks simply going to be the bank end operation, the base, essentially the equivalent of a Chinese factory creating the Apple iPhone? Is it going to be Apple that owns a relationship out of California, and the bank is basically just the operator that is pushing the numbers through to execute on whatever it is that customers want? I mean, what's your perspective? How can banks own the customer relationship in this scenario?
My friend Mustafa here has the most easiest job, that is to pose questions. So I would encourage the audience to ask him a few questions. But listen, I think I've been listening very carefully. And we keep talking about fintech and big tech. I think it's more tech fin now, where technology companies are coming within the financial services industry. You've mentioned a few examples, but banks are trying very hard to be banks, and we are slaves to this traditional system. And I think let's take a step back and understand, why are these tech companies trying to come within the financial services space? I think what banks are not doing well is what I would probably coin a word called lifestyle banking, right? So today, if you look at technology players, and just take an example, you took Apple as an example. With the Apple Watch today, you can go into the user's wellness and health lifestyle. right? Your trackers today can tell you the calories, can tell you your pulse rate, your heart rate, what you're taking, what you're not taking, and so on and so forth. So the data that banks have today, which is not being made use of, if banks are not going to make use of that data and introduce what I call lifestyle banking, then somebody else is going to do it. Because today, the product suite that some of these technology companies have, from watches to mobiles to cameras to everything, just think about it. What have they done? They are not selling your product. They are getting into your lifestyle. They are touching your daily lives. In my opinion, I think banks can touch the lives of every customer day in, day out, but we are not doing that. And if we don't do that, we are going to lose market share to some of these big names, whether it is Alibaba, it is Samsung, Apple, or you name it. And I think banks are trying to survive by tying up with some of these firms. But I think, in my opinion, banks don't need to tie up with anyone. If we do what we are supposed to do, which means touch the lives of every customer. I'll give you an example, right? From the time the customer opens an account till the time he sets up a family, his kids graduate and all of that, we are touching the lives of every customer. Are we using that data? Are you in a mall and you get a message from a bank saying that, you know what, I understand that you're in this mall and you can dine here and we've got a special offer? We don't do that. And because we don't do that, tech companies have got in through what I call the easiest medium, which is your mobile phone today. So I think, in my opinion, I feel that there is a lot of risk. Just slightly differ with my friend Mazin from Adib here. I think there's a lot of risk that banks can face if we don't get our act together. We have the customer today. If we don't make use and give the customer a wow experience and give the customer what the customer is looking for, which means touch his daily life, then I feel that somebody else is going to do it. And all these big tech firms have the capacity and the capability of just becoming a bank.
I think, Dr. Adnan, you've hit the nail on the head with the term lifestyle banking. And as
it's copyrighted, so I'm just telling you right now.
As a devil's advocate, I mean, I would just put that back. Is this just, a better way of saying being more customer centric as opposed to being product centric, which banks have traditionally been, right?
Yeah, the very simple one-word answer to that is yes. Mm-hmm. We have to become customer centric. Gone are those days when you could sell products to people, or you could sell what the customer did not even want. Right? Yes. It doesn't happen anymore. Yes. I think today, with this overbanked panel that we have, the banking markets that we come from, I think each and every one of us is just looking at how to give customer the wow experience. That can be done through artificial intelligence, robotics, data analytics, better customer services, wealth management services, and many other things, right? But the key to all of what we are doing is better customer experience, which is what these customers are getting, these users are getting from these big tech companies, right? Mm-hmm. And that's why they are embracing that technology more and more, because it is touching their lifestyle. Who would ever think that a phone could take pictures? Who would ever think that a watch can track your health? But they've done that today. Yes. And I think banks have to go to that next level if you want to retain your customers. Otherwise, it's just a matter of time. The Alibabas and the Amazons of the world are just going to set up a bank, and we'll probably have to queue up looking for a job there.
I think that's very, very apt. Do you think banks in our region, particularly Islamic banks, understand what customers want from them and are able to develop the products and services that can help cater to their needs, right? And do they even have the data to be able to understand what they're doing in that regard? What would be your perspective on that?
Very, very quickly, Mustafa, I think you asked a very apt question. You said, is data there? Do banks have that data? I think data is there. What you're doing with the data is missing. So analytics is a very important piece that is going to take center stage from now on, because analytics is going to match customer with customer's lifestyle. And when you understand the customer's lifestyle, you can do lifestyle banking, you can bring those products and services, you can bring variants, and you can give customer what he wants and ultimately reaching a wow experience. A decade from today, we are not going to be referring the millennials as millennials, right? Because they're going to graduate into a different level altogether.
Yes.
So I think, I think banks need to understand that these are people that are not going to be millennials or called millennials, which is almost going to be 40% of the population maybe in a decade from now. So they are not going to be millennials anymore. So what we need to understand is that what do these customer segments prefer? And I think to a large extent, banks have already started to give these millennials or these customer segments what they want, because with the advent of social media, all of us have now gone and are reaching those customers through social channels. That was not there a decade ago. It's there because we've understood that that's what that segment is looking for. So I think customer preferences are going to evolve, and with the evolution of customer preferences, all of us will be working towards meeting those customer expectations. So I think let's not get ahead of ourselves and start breaking what is not or fixing what is not broken yet. I think in time, I'm sure that banks will also either through tie-ups or through their own evolution and innovation meet the expectations that they've done so wonderfully well over the last so many decades. So I think digital will play a key, but banks, I think, have the capabilities and expertise to meet customers' expectations.
No, I think that's very interesting. And while I have you on that point, you mentioned something very interesting about how the needs will evolve over time for these customers, right? And I want to put it back onto you, and I will not. I'm not going to ask about DIB or any other bank here, but just broadly as an industry, you mentioned that the data is there, but it's not being used, right? We're still classifying our customers by the size of their bank accounts or by the size of their salary. We're not looking at the development cycle. And particularly, we're not looking at, for example, when I've been banking with the same bank for, 15 years now. When do I receive my salary? I'm sure my bank doesn't know. When do I make my charitable donations? When do I pay my kids' school fees? When do I buy my tickets for holiday? Right? This is all information that banks can utilize to better enhance my experience of banking with them and provide me products when I have excess cash flow and provide me products when I require support. Right? When do you think we'll be at a stage where we will do away with the traditional mass, upper mass, affluent, upper affluent segments and go to more customized segments, a segment of one, as Mazen has mentioned previously in a conversation.
And that's the very reason in my preamble I spoke about lifestyle banking. I think lifestyle banking needs to change the way banks look at customers. Because I think those pyramid structures are archaic now, where you would call, ultra high net worth individual, upper mass, affluent mass. They would continue to remain, right? They would continue to remain. But I think the way banks are going to segment customers is not just what they have today, but what is the potential of them in years to come. So I think data is there, but that data is not being analyzed. And as banks start analyzing those data, they will also change the way they are looking at segmenting their customers. I think it's just a matter of time. The problem is, we start becoming impatient very quickly. So I think we just need to be a little patient. We've done this over so many decades and so many years now. I think, you are already writing off bankers, So
not at all.
So just have some faith in us.
No. You're the leaders of our industry, and we look to you for guidance in these difficult times. And this is why I'm pressing genuine questions that we all have as stakeholders in this industry to yourselves today. Gentlemen, if I can ask you for your closing remarks, what is the one initiative in the near term that you think banks should focus on? 1 or 2 words only, in context of the results that we've seen here. Steve, if I can start with you and go down.
Customer experience.
Very
straightforward.
As expected. Dr. Adnan?
Very quickly, I think economic environment will always pose a challenge. But more importantly, we have spoken about why big tech and fintech companies are coming within our side of the turf. Is because we are not giving what the customers are looking for in terms of their lifestyle needs. So I think from that perspective, changing customer preferences, in my opinion, takes the right center stage. And if we can address that, then obviously we will keep these fintech and big tech guys out of our business. And if that happens, there will be less of cyber security issues and the economic environment will be a better place. Yeah.